What's up everyone, welcome to today's trade recap. I'm gonna go over the trade I took today on FOMC, Wednesday, December 10th. Pretty nice trade, probably gonna be my last big trade of the year, around 83k. And yeah, we'll go over all the confluences and why I took this pretty A+ setup. And yeah, let's go over it. So first of all, on the real high time frame, we had this unfilled gap on the daily on NQ, and this was my target during all week. So Monday I wanted us to hit this, Tuesday I wanted us to hit this, Wednesday I wanted us to hit this, and we would never hit it. We edged it on Monday, and that's the most we got, and on Friday also. So this has been my target for a few days, and usually it's pretty common that once you have a pretty clean drawing liquidity like this, a high volatility news is gonna pump enough liquidity into the markets so you can tap your drawing liquidity. So if you look at the 1 hour here, you can see that we really failed to tap into this daily gap right here, and we had a bunch of stacked lows on the high time frame here. So it was really hard to predict where this reversal would happen. I was pretty much just watching, and that's why also I didn't take any trades earlier this week. So coming into the morning here, during AM, I wasn't expecting a lot of price action because usually if you have FOMC in the afternoon, sometimes AM is pretty choppy. But the high time frame looked pretty confusing to me, mainly because we had SMTs in the buy side and in the sell side. So you can see here during pre-market we had this pretty big dump, and we ended up having this SMT with this low right here when ES took it, and we rejected from it pretty much immediately. Once 9:30 hits, ES ends up resweeping these lows, and later into AM during 11 AM, NQ sweeps this low. So for me, this was already manipulation for price to go back to these highs. I wanted to see NQ going back towards London highs and eventually onto these highs right here in the daily gap too. So I ended up not taking any trades during AM. You can see that after we reswept these lows on ES, we started displacing higher and then chopping a little bit. At this point I thought we would go back to London highs, but we ended up just chopping and then resweeping this low on NQ, which was Tuesday's low. So at this point I was done for the AM session and I just waited for FOMC. Now coming into PM session, which is where all the sauce is, we have an accumulation from 11:30 AM after we reswept these lows until 2 PM right here where FOMC hits. Now I don't try to take any setups right after FOMC because there's a lot of volatility in the market, super easy to get stop rated. So I just wait a little bit here, and when you have a big news candle like this, it's pretty easy to take mechanical trades. So you're gonna have your data highs and your data lows. These are both great liquidity pools. Of course, if you have one of them aligned with your initial drawing liquidity, which in my case was this daily gap right here, it's even better. So my ideal scenario here would have been if we had taken data lows and then get a setup towards data highs and the daily gap. Now we get something like this. We don't actually leave data highs. We ended up sweeping it. We also take London highs with this move up right here. So it takes a bit of liquidity on the buy side, but I'm still okay with taking longs after this because my main drawing liquidity is still there, which is the daily gap. So we have this kind of seeking destroy pattern and going up to data highs. We sweep it, go back to this internal low, sweep it, then go back to this high. Now during this move down right here, I really like this move down for 3 reasons. First reason is we take this time-based liquidity point right here. You can see that this point is where 2 PM opens, and 2 PM, like 10 AM, is the open of a 4-hour candle and a 1-hour candle. So this is a significant liquidity pool just based on the fact that it's 2 PM open. So a lot of people would wait for this low to get swept because this technically is data lows, but although this is a liquidity pool, you sometimes don't have to go all the way to the wick. Sometimes just getting to the body is enough since it's the open of the candle, especially when it's 10 AM or 2 PM news like this case, because it's the open of the 4-hour candle, as I said. So this move down taps into the 2 PM open. You can see that this leg here that taps into my key level has one significant retracement. So this right here is where I place my ABS. And you can see that this region right here aligns with my key level. So this right here is my ABS rejection. Another thing that I like about this move down is that we have an internal SMT between these two lows right here. And of course with this key open. So we have these stacked SMTs, we have ABS rejection, we have a tap into this key level right here, this 2 p.m. open. So this right here was a pretty nice reversal point. So at this point I'm thinking, okay, all I need is an entry now. So I start looking at possible inversions I can take. So we have this 1 minute gap, which is fine, but it doesn't look too good in the leg. Also, it's not the highest time frame. So you can see we also have a 2 minute gap, which looks way better. And we have a 3 minute gap, which one looks the best since the close is on a pretty nice spot in this leg. And also it's the highest time frame in this leg. So you can see there's no 4 minute or 5 minute or any other gap. So 3 minutes, the highest time frame. So this is the best entry you can get. So this right here was my entry after the close. My stop was at the body. I don't leave my stop at the wick for two reasons. One, because we have stacked SMTs, so I'm not really expecting price to go back to the CE of this week or anything. And two, it drastically changes my RR. So if I feel like the RR changes a lot by placing it on the wick instead of the body, I usually place it on the body because on the long term it's probably going to be better for RR reasons. So that's where my stop loss is, and my TP was originally at the daily gap. So you can see this trade runs pretty nicely, and I ended up full closing this earlier for a few reasons. One, ES ended up sweeping this high right here, and this right here is extremely high resistance liquidity since it's basically the last high in this whole range right here. Also, NQ also takes out these two highs right here, which was also a high resistance liquidity. And yeah, even though I full closed this, I was still pretty confident that we would hit this daily gap since it's a huge liquidity pool, but it ended up being the right close and we ended up rejecting from this. So pretty nice close. I ended up full closing around like here. Now there are two things that you can see to check if your ABS trade was valid and your fib placement was good. So the first thing would be if your breaker got respected. So this right here is your bullish breaker after we closed above this high. So you can see we didn't even tap back into this breaker, but it got respected. So this gives a lot of safety on your break even, which would be this high right here. This is when I move my stop to break even, and I'm pretty confident that I'm not gonna get break even because if price does come back to this region, there's still this breaker to hold. So this breaker is protecting my entry right here. Another thing is you can see these deviations on this side, they help me give my entry, right? So the rejection on these levels, this is a confluence for me to enter off of, but these levels on this side, they can help you as a target. So you can see this -2 deviation here, it aligns pretty much perfectly to where price went to as the final TP. So I've said this before, I don't usually use the deviation as a target on their own, but if they align with a liquidity pool, then it's pretty nice. So you can see these levels right here, they align with the daily gap and the other highs. So if you look at this high on the high time frame, pretty much aligns it perfectly with this deviation. So this is a pretty nice final TP. So that's also why I ended up full closing. And you can see pretty much zero drawdown trade. 3.6 RR. I was in this for 1 minute. There's also one reason why I didn't take any partials in this high. I could have taken, to be honest, because this was already a 1 to 1.7 RR, so I could have taken like 50% of my position there, but I was in for 1 minute, so I ended up just holding all the way to this buy side here. So yeah, there was a few possible variations you could have had in this trade. So for example, you could have moved to break even after we closed above this high. After we validate this breaker, this would have been an earlier break even if you wanted to be extra safe. I'm cool with holding all the way to this high though, because usually, since this is the highest time frame inversion in the leg, we usually deliver all the way to the internal high. So that was my break even point. Another thing is, if you were really confident in the setup and you like the aligned SMTs right here and the ABS rejection, you can enter on the real low time frame. So let's say you go to the 15 second instead, you can see that in this move down, we ended up validating, let's say, the OTE of this range. So you can see we tap into OTE and also these low time frame gaps right here. So you can see this gap aligned with the OTE, we ended up respecting it. So if you wanted to, you could have entered at any rejection right here. So like this would be a pretty safe entry, and it would have upped your RR to like an 8.6. So depending on your discretion and how confident you are in the setup, you can go for lower time frame entries instead of waiting for a high time frame inversion, and you can see how that changes the RR. Of course, it's gonna be lower win rate in general because it's way riskier, but this is definitely a possibility. So yeah, this was the one trade I took this week, around 80k. With that and the trade I took on Friday, I'm a little over 100k for this month. Um, I'll keep trading till next week to farm some green days and get some more payouts, but this should be my biggest trade of the month, and we'll see how the rest of the year goes. So yeah, thanks everyone for watching, and peace.